Good morning and welcome back to Morning Markets from True Potential. Paul Durrans, Investment Director. Today we're going to look at yesterday's US inflation report. We've talked throughout the course of the year about the challenges that global economies have faced with higher inflation. And that's been a real challenge for central bankers, for governments, for households and for corporations. Yesterday we had the US inflation report and all eyes were on it, and it came in better than expected. Looking at the details, US inflation, the headline level came in at 7.7%, which was better than what analysts and investors were expecting. They were expecting 7.9%. On a month-on-month basis, it came in at 0.4%, again, better than the 0.6% expected, so it was a very welcome surprise. And we can see on the chart here, the blue line is the headline inflation rate, and you can see it appears to have peaked and now trending lower towards its 2% target, which is a real positive. When we look at the underlying details and underlying components, we see the volatile airline fares. They fell over October. We also saw medical care and as well as apparel also declining. On the components that continued to push higher was energy and food prices. It's important to strip out those volatile components of energy and food and look at core inflation, which we have on the chart. This is where the central bankers really focus on because they can most directly affect core inflation through their higher interest rates. It's very difficult for them to bring down food prices and energy prices via interest rates. So we can see that core inflation has also come in lower than expected, in at 6.3%, and on the month-on-month 0.3%. Shelter continued to remain firm, which is a big component of the basket and one that we'll continue to watch going forward. But on the whole, a very positive inflation report, and should, if we can continue along the trend, which is currently set, and head towards that 2% target, that will be a real boost for households and corporations to have prices at a more palatable level. Stock markets rallied aggressively. The S&P 500 up 5.5%. The Nasdaq also in the US up 7.4%, showing the real strength in the US market, but we also saw strength to a lesser extent in Europe and the UK. Global government bonds also rallied hard, as did corporate bonds. We saw real strength in the pound, up 3.2% against the US dollar as investors' risk appetite grew significantly. This morning, China opened up strongly as well, up nearly 8%. And they were boosted by not only by investor risk appetite, but the announcement from the Chinese government that they are going to ease quarantine restrictions for travellers into the country, reducing the time that they have to quarantine in a hotel from 10 days to 5 days, and then a further time at home from 7 to 3 days. A real positive that they're heading towards removing this zero COVID policy. And I think today's movements and yesterday's movements in stock markets really, again, emphasize the importance of remaining invested and the challenge and danger of trying to time markets. That's everything from us today. Thank you for watching, and we'll see you next week.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.